NTUC Enterprise Cooperative Limited recently issued an updated statement on Tuesday, July 30, addressing the growing public outcry and concerns over its impending sale of a majority stake in income insurance to the German insurer Allianz. The announcement follows Allianz's earlier expression of intent on July 17 to acquire 51% of Income Insurance's shares, a move valued at approximately 2.2 billion Singapore dollars. This decision has sparked significant backlash from the public and experts alike, raising questions about the future of the company that has long been seen as a cornerstone of Singapore's cooperative movement. Prominent figures have weighed in on the controversy, with former NTUC Income CEO Mr. Tan Sui Chi and Ambassador-at-Large Dr. Tommy Koh both voicing their opposition to the sale. Their main argument centers on the belief that the sale directly contradicts the commitments made during the corporatization of NTUC Income in 2022, where it was promised that NTUC Enterprise would remain the majority shareholder. At present, NTUC Enterprise holds a substantial 72.8% stake in Income, making this proposed sale a significant reduction in its influence and ownership. For many Singaporeans, NTUC Income is not just another insurance company. It represents a cooperative committed to providing affordable insurance to underserved workers, a mission that has been part of its identity for decades. This deep-rooted connection has fueled concerns that Allianz, as a profit-driven multinational corporation, may not fully align with or continue to uphold Income's original mission. These concerns are not unfounded, given that the insurance landscape in Singapore has become increasingly competitive. In its latest statement, NTUC Enterprise emphasized the drastically changed competitive landscape within Singapore's insurance market. With over 40 global, regional, and local insurers vying for market share and growth, the pressure on NTUC Income to remain competitive has intensified. The company has reportedly lost several key contracts, which NTUC Enterprise points to as evidence of the necessity for robust and continuous capital support to thrive in this environment. The statement reads, "A social enterprise model alone cannot shoulder growth in Singapore's competitive insurance environment," highlighting the challenges faced by NTUC Income. NTUC Enterprise believes that the partnership with Allianz will provide Income with access to global expertise in areas such as asset management, technology, product development, and distribution. This, they argue, will significantly enhance Income's competitive edge and ability to serve its policyholders more effectively in the future. To reinforce its commitment to Income's stability and growth, NTUC Enterprise also provided several examples of its historical stewardship over the company. In 2012, NTUC Enterprise issued a letter of responsibility to the Monetary Authority of Singapore, MAS, to ensure Income Insurance's liquidity and financial stability. This move was part of a broader effort to strengthen the company's financial foundation. Additionally, NTUC Enterprise converted its shares to irredeemable ones, further bolstering the capital adequacy ratio of Income Insurance. During economic downturns, including the COVID-19 pandemic, NTUC Enterprise injected approximately 630 million Singapore dollars into Income to maintain its financial health, with a crucial 100 million Singapore dollar injection during the pandemic itself. The corporatization of NTUC Income in 2022 was another strategic move by NTUC Enterprise, aimed at providing the company with greater flexibility and strengthening its long-term competitiveness. The corporatization allowed Income to explore strategic options, such as mergers and acquisitions, to support its growth. NTUC Enterprise addressed the promise made at that time regarding its majority stake, stating that there were no material developments at the time, and hence, it would have been misleading to suggest anything other than NTUC Enterprise remaining the majority shareholder, subject to Income's best interests. In the face of public concern, NTUC Enterprise's chairman, Mr. Lim Boon Heng, reiterated the company's unwavering commitment to protecting families financially against key risks. He acknowledged that while the landscape has changed, the social objective remains unchanged. NTUC Enterprise will continue to be a substantial shareholder, guiding Income towards achieving its social outcomes, even in partnership with Allianz. Mr. Lim also noted that the cooperative model, while once effective, is no longer suited to Income's current competitive ambitions and growth plans. However, he emphasized that NTUC Enterprise intends for Income to remain financially sustainable and socially responsible, in line with its purpose of empowering financial well-being for all. Looking ahead, NTUC Enterprise expressed confidence that the partnership with Allianz is in the best interests of policyholders and shareholders. The combination of Income's strengths and Allianz's global capabilities is expected to create a highly competitive composite insurer in Singapore. Allianz's financial strength, technical expertise, and asset management capabilities are seen as crucial to underpinning the value of policies and supporting future growth. Mr. Lim highlighted that social enterprises and cooperatives are no longer unique in their mission to do good, as more businesses embrace stakeholder capitalism. He expressed confidence that the Allianz Income partnership would open exciting new opportunities and enhance the long-term competitiveness of Income. He stated, "Going forward, Income Insurance will be backed by not one, but two institutional shareholders. NTUC Enterprise will remain a substantial shareholder to provide direction towards social outcomes, in line with the principle of doing well and doing good." However, despite NTUC Enterprise's assurances, the public reaction to the proposed sale has been overwhelmingly negative. Following the release of the statement, netizens took to Channel News Asia's Facebook page to express their strong opposition and skepticism. Many questioned the rationale behind selling a majority stake to Allianz while claiming to remain committed to Income's social mission. One user commented, "This is not an excuse to sacrifice national interest." Another criticized the move, asking, "Instead of being resilient in the face of failures and building the grit to be competitive, NTUC Enterprise throws in the towel? Is this how we teach our next generations of Singaporeans? How about our future leaders? Are they going to give up leading corporations in the country in this volatile world? Is this the Singapore dream we are building or the beginning of Singapore nightmares?" Another commenter expressed doubt about NTUC Enterprise's ability to influence Allianz as a minority shareholder, questioning, "Why sell 51% and claim to still have the heart to ensure the new merger will continue to emphasize social causes? As a minority shareholder, what makes you think you can influence decisions when Allianz changes direction in the future? This seems more like a deal for shareholders to unload their shares and leave." Further criticisms were directed at the perceived lack of leadership and imagination within NTUC Enterprise. One user remarked, "I feel this eagerness to sell to Allianz demonstrates a lack of imagination and ingenuity by NTUC leaders. NTUC Income not competitive? Just sell it and make it somebody else's problem." Another user pointed out, "Profits from NTUC social enterprises likely go to defray the cost of running NTUC. It's expensive to fund a large number of employees and Labour MPs based solely on member subscriptions. There are many mouths to feed at NTUC, hence not competitive enough when bidding for contracts." Some commenters also criticized the broader implications of the sale for NTUC Income's mission and values. One harshly noted, "So they finally admit they are selling due to their incompetence. One can imagine if these public servants weren't backed by our reserves, taxpayers' hard-earned money, all our national assets would have gone bankrupt by now." Another lamented the shift away from the cooperative's original purpose, stating, "NTUC Income was set up to provide affordable insurance to workers and the lower income group. Why compete with profit-making companies? Now NTUC Income's focus is to make more money, benefiting CEOs, COOs, directors with million-dollar compensations, moving away from the social enterprise label." The backlash underscores the significant public concern and skepticism surrounding the proposed sale. Many Singaporeans are left wondering whether this move will compromise the core values and mission that have long defined NTUC Income. The controversy continues to unfold, raising questions about the future of one of Singapore's most trusted insurance providers and the broader implications for the country's cooperative movement. We would love to hear your thoughts on this developing story. Do you think the sale of NTUC Income to Allianz is the right move? Will it help the company grow and stay competitive, or does it signal a departure from its original mission? Share your views in the comments below, and don't forget to like, share, and subscribe to our channel, 2230, for more in-depth news coverage and analysis.